In this video, 3 crypto trading strategies for beginners. I'm going to go over how to actually spot these types of trading patterns on the chart, how to actually implement trades, so where to spot the patterns, where to put your entries and your take profits, and then specifically how to actually enter these trades on a crypto trading system like Bybit, where to put your long and short positions, or your take profit and stop loss levels, including just explaining what the patterns are and how traders would trade them. Timestamps for everything down in the description below. Let's come to our crypto trading system then. I use Bybit. I'll leave a link to them in the description. They give a deposit bonus up to $4,000 if you're new, so check the details via that link down there. You can get a deposit bonus that you can trade with. I'll leave a beginner's guide to Bybit as well if you want to know how to get set up on the system and get funds in and out of Bybit. And what we're going to do is come to the derivatives part of the app. Day traders will prefer to use derivatives. You can trade just with your own money, no leverage or anything like that in the spot market as well. You can certainly do that, but derivatives is a little bit better for day trading, and I'm going to choose Bitcoin and ETH for these examples. We can also get the charts up right here, Bitcoin and ETH, and so we can switch between them right here, and this is the chart which I'll show you, and then we can enter our orders on the right hand side. The first thing we're going to look at though is putting support and resistance levels on our charts. What is support and resistance? Well, what is support and resistance? Well, it's the first thing you put on the chart before looking at any trading strategies like this one, which is just a simple TA pattern. So what is support and resistance? It is where the price meets support to the downside and gets supported and bounced off, or resistance to the upside and gets bounced downwards. Now, during this downtrend, as you can see, we are looking for some sort of support level, and we actually found it around this level right here. You can see definitely to the downside, this is an area of support where the price doesn't go further down and meets support to bounce it back up. Now to the upside, we want to find resistance as well. So what we can do is come to our chart right here. This is TradingView, by the way. It's completely for free. I'll leave a link to them down in the description as well. We can come to our horizontal ray, and then we can put these on the chart. So where this support is, we just want to draw that ray. Now to the upside, you can also see there is a little bit of resistance here 2 times, and I put a resistance level right there as well. So now we have support and resistance, and we can use our strategies to trade this type of chart setup. Now what we can also do as the chart moves on is find new support and resistance levels. This is a clear level up here of resistance. We really got a strong move to the upside, but then we met resistance and got rejected down. So this is now a resistance level, so we can draw that on. Now the difference between this and this is massive, right? It's a huge price difference. And so that's for very, very long-term trading. But what we can also do is draw local support and resistance, which is much closer to the current price. So as you can see, we're trading around this, 1,500 for Ethereum at the moment, and we can just click this as potentially a support and resistance line. As you can see, locally within the current price range, we have this as resistance and this is resistance right here. And if we go back, we do have a lot of choppy trading around this level as well. So what I would do if it isn't a perfect line is come to the drawing tool and then just draw a rectangle. And as you can see, I've got one already. This would be, an area, a really good support and resistance area that the chart really does seem to trade within. What I would suggest here is that this is probably a level where Ethereum is maybe fairly valued between buyers and sellers at this time. So anything under here, you're looking for these support levels to bounce off. If it does trade around here, then breakthrough, you're looking for either this level right here, previous resistance, or this level right here. So that just gives us support and resistance levels on the chart where we say, where is the price going to get sucked to and maybe meet support from and resistance, and then we can use that to trade and just have some wider levels that we can look for where the price may go to. The first pattern that we're going to trade is a double bottom pattern. This is what it looks like. This is a trend reversal pattern. Now a double bottom suggests that a bottom is found and that you're going to move higher out of it. So what we're looking for is a downtrend and sellers coming in, they meet a support level and it bounces, the sellers try and force it lower again and it bounces again. This suggests strong price support at this level that may actually bounce through, breakout, and then we trade this breakout here to the upside. That is, the perfect trade anyway. So what we would do is look for a double bottom and then the price breaking out of the double bottom pattern, this resistance, we would trade right here, put our stop loss a little bit lower, and then our take profit is the height of the double bottom pattern. So we would be looking at somewhere like that for our take profit. Let's put it on the chart, as you can see here. So this is a perfect kind of double or even triple bottom pattern. We have a downtrend right here. And so we're looking for either a continuation of that trend down or a reversal of that trend up. And as you can see, we do have what is a triple bottom basically, with the price getting support at this level 3 times. Now, as you can see, we meet support 1 and then we bounce up. That gives us the height of the pattern. We then come down and get support again, and we get rejected at the height of the pattern. And then we get support again at this level. And on the breakout, this is exactly where we trade right here. And you can put a trend line in to the height of the pattern from here to here. And then you can trade that breakout, put this on right here, and that would be your take profit level. Let's put that on the actual trading system, as we can see. So what you can do very easily, see this pattern right here, exact same pattern, check for the height of the pattern, however long it would be. So we'll put that right here. And then you can go on to the support, these long and short position calculators. So we're taking a long position because we're trading on this breakout. Now you can trade the breakout itself right here, or you can wait for the breakout and then the retest and then the breakout. As you can see on this occasion, the retest didn't happen. So the breakout was something we could trade. So we'll put our long position right here, and our take and our stop loss would be somewhere as a rejection. So we would probably put it halfway through the pattern itself as a stop loss, and our take profit would be the height of the pattern right here. And as you can see, that played out. So on the right hand side, we would have our order entry, which as we can see is around the 1300 level. So order entry 1300, order quantity, how many ever ETH that you want to trade. And then you would buy long with a take profit and a stop loss. Our take profit level is around 1500. So you put that here, 1500. And then the stop loss is down here at 1150, 1150. And that would be your trade. You would open a long position, as you can see here, open long, and then you would let that trade run out. This was a perfect triple or double bottom in this case, which obviously went into a good trade for us. The next pattern to trade is a wedge pattern or a falling wedge. I'll show you how to trade this. This is actually a reversal pattern, but we're looking to trade a continuation of an uptrend with this. There is a rising wedge as well, but I'll show you the falling wedge for this example. So a falling wedge is actually contained within a wider uptrend. So we want to look to go long. This is a reversal of what's happening here. So this is actually trading downwards, but we're trying to trade a breakout to the upside because we're looking for this to be part of a much longer uptrend where this is kind of, you know, a pause in the trend. And so I'll show you exactly how that works on the chart. So we first have to identify that we are indeed in an uptrend. So how would I do that? This is the wider support and resistance level, and we have a support level here that we've bounced off a few times, you know, potentially right here. And we've moved to the upside. We got a pullback, which is a higher low, and then we're going to a higher high. And now we're showing the wedge, the falling wedge pattern. So what we're looking for is to trade the breakout of this pattern, go long here, because we're suggesting that this uptrend continues further. And this is just a falling wedge, which is a bullish reversal right here. And so that's what we're trying to trade. So where do we put all our order entries? We trade the breakout, and then we put the stop loss like halfway down into the pattern. And then the take profit is how the height of the pattern itself when we entered into the pattern. So we can get our trend line as well. Trade this, which is how long that was, wherever our entry was right here. We can put a long position on at the breakout. There was no retest right here, so if we waited for the retest, we would have missed the pattern. So we can put our order entry right here, our stop loss somewhere within the pattern, either halfway, or as you can see here, it seems like the price actually bounced off of this price level once, tested again and bounced again. So that would be a stop loss around here, and then our take profit would be the height of the pattern right here. That's a 1.88 risk reward ratio, which is pretty decent. So we'd put these price levels into the order price and quantity, and then put your stop loss and take profit right here as this position calculator shows. Another type of pattern to trade is a bear flag, which is a reversal from the flag, but a continuation of a downtrend, so known as a bear flag. The complete opposite of this would be a bull flag, where you're looking at an uptrend, then the bull flag down, and then the continuation of an uptrend. So that would be a bull flag. We'll trade a bear flag right here, where we get the downtrend and then a seemingly strong uptrend, but we're actually going to trade the breakout of this to the downside as a continuation down. How do we spot this on the chart? One is right here on the Bitcoin price. Now again, I have my support and resistance levels. This is probably major resistance up here, which is the top end of this recovery. This line down here was the bottom end of the sell-off. So we had a big recovery here, and we have a mini support line right here that we broke through, as you can see. So definitely moving to the downside. I can also see we potentially can put a support level right here as well, because we had 1 and 2 touches of this level. So this might be important to trade as well. So I'll just put that on the chart, and then we have kind of all these different levels that the price may trade around. Now, as you can see, as part of this downtrend, we have a bear flag. So we have the downtrend. We then actually get this bear flag, which is coming off this support level. So again, this price level is acting as support, and people may think, wow, this is a support level. We're now going to actually trade up to this resistance level, but this is a bear flag, as you can see by this. Absolutely a bear flag, which means that the downtrend may continue. And so what we'll be looking to do is take a short position in this case, trading the breakout of this bear flag. So flag, and then we have the choppy trade up and then the breakdown. So that's what we're trading. And what we would do here is try and trade this breakout. So we'll actually take a short position in this case. Short position, we can take the order entry on the breakout, which is right here. Now, where do we put our stop loss? Where do we put our take profit? Well, our take profit is below our entry price because we're going short in this case. So what we can do is usually look for the height of the flag itself as the take profit level. So what we can do is do our trend line and say the break of this support was probably the start of the flag down to this level, and that would give us quite a way away to actually get this take profit level. Now, if this is very violent, this may be just a really long, might be a long way away from your entry, and you may not be comfortable taking a trade with that big of a price difference. So what you might want to do is just cut this down somewhat and say, I'm going to take it from this level to maybe 50% of this move or 70% of this move. And that's where you could take your take profit. So what we do is trade the breakout right here and put our take profit around this level, which it was anyway, as you can see. And then where do we put our stop loss? Usually with the stop loss, you will put it within the flag or maybe at the resistance of the flag. So as you can see here, this was resistance. Now, as you can see, if you place a stop loss extremely tight to your entry, you have much more chance of getting stopped out with like a false breakout. So as you can see here, what happened is we got this move up and then a breakdown. Now, if sometimes the price can actually fake to the upside again, right? So if you got in at this level and then we actually got like a kind of a fake out and a break here, you might get stopped out. So sometimes it's good to actually let the trade breathe a little bit and give yourself a little bit more time with the stop loss. But that's up to you whether you want to be very, very shallow with your stop loss. If you're taking a lot more leverage, you might want to be a bit tighter. If you're using less leverage because you think there's more volatility, you can widen out your stop loss a little bit and use less leverage. If you want to know how to use leverage, Crypto Investor course linked in the description. There's like 50 videos on trading futures, using leverage, setting up positions, knowing exactly how much risk to take. It's all in the Crypto Investor course, so I'll link that in the description as well. And then I'll take profit down here. As you can see, we would have been profitable in this instance as well. And even if we had gone down to the next support, or the support line, the major support, and given ourselves maybe a little bit of breathing room, we would have traded that as well. But you can't really do that. We'll just take the length of the flag right here, and that would have been a decent trade as well. All of these patterns were cherry picked and are basically perfect patterns to trade, and in hindsight, very easy. If you are looking to make regular profits trading, just know that patterns like this often take weeks or even months to play out, and you have to take advantage of them when they do play out. But mostly trading is just sitting on your hands waiting for the perfect opportunity, rather than taking much worse risk reward trades that really don't have anywhere to go. So a part of trading is definitely just being patient and waiting for the great opportunities. Now, really important as well, if you're trading crypto, especially on leverage, is to work out any liquidation prices if you're trading futures. So come to the calculator, it's up in the right hand corner, and see what your liquidation price is. In this instance, as you can see, if I'm trading on leverage and I've got 5x leverage and I'm trading 1 Bitcoin, you can see my entry price here was 21,211, which was this price right here. If I'm using 5x leverage, my liquidation price is 25,000. So if the price gets up to around 25,000, my entire position is completely wiped out. That just happens to work out at around 20% away from the entry, because if you're using 5 times leverage, 20 into 20% into your position is 5x levered, which is 100%. So if you put $1,000 in and you're 5x leveraged, a 20% move in the wrong direction can completely wipe you out. So what we need to do and make sure is that our stop loss is always in place. So if the position moves against us, we take a small loss and then move on to the next one. And we don't have a liquidation, which comes with higher fees and liquidation fees. So you can use that calculator to work out how much leverage. And if you can see, if the price is more volatile and you think you're not too sure, just reduce leverage down. You don't have to use leverage at all, let's say 2, and you can see the liquidation price moves away. That can give your trade more breathing room if you want to give it that. Way more details in the Crypto Investor course that goes through how to manage positions and also how to think about leverage and how much you want to take, if you want to take any at all. So check that out via the link in the description. The Bybit deposit bonus is down there as well. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.